Welcome back to FinEnergy. If you've ever wanted to invest in the stock market but didn't know where to start, you're in the right place. Today, we're breaking down everything you need to know to get started on your investment journey. Investing in the stock market can be intimidating at first, but once you understand the basics, it's one of the best ways to grow your wealth over time. Let's dive into how you can start investing as a beginner. What is the stock market? Before we start investing, let's first understand what the stock market is. In simple terms, the stock market is a place where companies list their shares, and individuals like you and me can buy and sell those shares. When you buy shares, you own a small piece of the company, which means you can profit if the company does well. Stock prices can go up and down, which is part of what makes investing in stocks exciting and sometimes nerve-wracking. But over the long term, the stock market has proven to be one of the most reliable ways to build wealth. 2. Understanding different types of investments. Now that we know what the stock market is, let's talk about different types of investments. When most people think of the stock market, they think of stocks, which represent ownership in a company. But there are other types of investments as well. Bonds are loans you give to companies or governments in exchange for interest. Mutual funds and ETFs, exchange-traded funds, are baskets of stocks or bonds, meaning you're investing in many companies or assets at once, which helps reduce risk. 3. How much money do you need to start investing? One of the most common questions new investors have is, how much money do I need to start investing? The good news is that you don't need a lot of money to get started. With some investment apps, you can start investing with as little as $5 or $10. The key is to start early and invest consistently. Over time, those small amounts can grow into significant wealth, especially if you reinvest your profits. 4. Choosing the right investment platform. Now that you know how much to invest, let's talk about where to invest. There are many investment platforms available, such as Robinhood, E-Trade, Fidelity, and Vanguard. Each platform has its pros and cons, but for beginners, I recommend choosing one with low fees and easy-to-use tools. Most apps now also offer fractional shares, meaning you can buy a portion of an expensive stock instead of needing the full amount. 5. Setting your investment goals. Before you start investing, it's important to have clear goals. Are you investing for retirement? Or do you want to save for a big purchase in a few years? Your goals will help determine your investment strategy. Long-term investments, like retirement funds, can usually handle more risk, while short-term goals might require a more conservative approach. Be sure to align your risk tolerance with your goals. 6. Building a diversified portfolio. One of the best ways to reduce risk in the stock market is by building a diversified portfolio. This means spreading your investments across different sectors, asset classes, and types of companies. By diversifying, you ensure that if one investment does poorly, it doesn't wreck your entire portfolio. A good beginner strategy is to mix stocks, bonds, and ETFs to balance both growth and stability. 7. Stay patient and invest for the long term. One of the most important things to remember when investing is that patience is key. The stock market goes up and down, but over time, it tends to increase in value. Don't get discouraged by short-term fluctuations. Investing isn't a get-rich-quick strategy. The real money is made by staying invested for the long haul and allowing your investments to grow over time. So, are you ready to start your investing journey? It might feel overwhelming at first, but with a little knowledge and patience, you can make the stock market work for you. Thanks for watching. If you enjoyed this video, be sure to like, subscribe, and share it with others who want to start investing. Let me know in the comments, what's your first investment goal? I'd love to hear your thoughts. See you next time on FinEnergy.